Welcome back to the Investing with Purpose podcast, where we explore the intersection of success and significance. We discuss alternative investment options from our experience buying hundreds of millions of dollars worth of real estate, but most importantly, how we're using that business to impact people in a positive way to leave a legacy that matters. Let's get after it.
All right. Thank you, folks, for indulging me with those advertisers. I do appreciate that. Please, if you stop by any one of those advertisers, please say you heard it on TalkOne Radio. It helps me out immensely. All right. Steve Libman, a great guy. He was going to be on earlier in the month, and man, the guy's busy, and I get it. And we're just fortunate to have him come back. I was really overjoyed the fact that somebody really wants to come back on the show and be with us and inform everybody. So let me just give you a little background. Steve Libman is one of the managing partners of Integrity Holdings Group. Prior to that, Steve began as a realtor. And listen to this. He flipped almost 1,000 homes. I mean, that's a grind, baby. That is a grind. I flipped a couple condos. I thought it was like big stuff. Forget it, 1,000. I can't even put that together in my mind. But the guy's a hard worker when I hear that kind of stuff. So he got burned out pretty fast doing that and in a highly taxed business model. He moved into commercial real estate, apartments, senior housing, and storage units. I got to ask him when he comes in, how many storage units do we absolutely need? I mean, there's like 4 of them on each corner of every block. It's killing me. The student housing too, to create passive tax advantage income for themselves and their investors. Integrity Holding recently launched a $100 million fund after over $150 million in acquisitions. Steve's been around a long time. He's recognized by industry magazines and publications, Forbes, and the top 100 in real estate. IHG also runs a donor-advised fund, Investing with Purpose fund, where it carves out a percentage of the company profits to create passive income for nonprofits around the world, and hopefully some in the United States too. So without further ado, let me bring Steve into the show. How you doing, man?
What's up, Al?
All right, you, buddy. I'm glad you're here. Thanks a lot for taking time out of your fast-moving day.
No worries.
Yeah, let's talk about Integrity Holdings for a minute. And can you maybe give us just a background and take us through? A lot of people are, real happy with their investments. They're not so much these days with the stocks and bonds and all that stuff. But what's the advantage of diving into real estate over, the purely traditional stocks?
Yeah, it's a good question. And it's the answer that I came to when I lost my dad 9 years ago. He put all of his money into 401ks, mutual funds, stocks, bonds, things like that, traditional type investments. And then the market dropped, right? And when the market tanked, it took a couple years for it to come back. Unfortunately, he didn't live long enough to see that return. So he lost just over half of his wealth that he had saved over his whole life. And I had this moment of clarity where I recognized that the stock market is essentially a game of musical chairs. You don't know when the music's going to stop. And if you're in a down market, you lose a lot of your wealth. So we were already flipping houses, but I wanted to figure out what is the least volatile asset classes that we could purchase and hold property into, or where we could invest for retirement, for legacy wealth, for, just good stewardship. So through a ton of data, we came to the conclusion that commercial real estate really is overall better returns with the least amount of volatility, because it's tied to a hard asset. And, if my dad was in something like that, we probably wouldn't have seen that big of a dip. People always ask me, they're like, well, what happened during the dip? I mean, real estate also lost value. So it's always important to have the conversation that it's residential and commercial real estate is very different. Insofar that your house, Al, is the value is predicated on the value of your neighbor, right? What does your neighbor's house sell for? What does the comps in the area sell for? Commercial real estate's not like that. It's based on net operating income. It's a business essentially, and it's based on the income, not necessarily what the property down the street sold for. So in 2007, 8, 9, the mortgage default rate on houses was about 5 to 6%, right? That's what created this massive financial meltdown. It's between 4.5% and 6.5%, depending on what year you look at. Multifamily apartment complexes, the mortgage default rate, 0.5%.
Wow. Wow. That's quite a peasant. That's unreal.
Yeah. So sorry, I was a little dark. So yeah, it's important to recognize what are the differences, what are the different asset classes. And, real estate is not one general term. Real estate is houses. And when I say commercial, most people think I mean like retail or something like that. I don't mean that. Commercial real estate is anything over 4 units. So when I say apartment complexes, I mean, we buy, 380 unit apartment complexes. We built 500,000 square feet of self-storage. So, it's, commercial real estate is basically anything that's not residential over 4 units.
So what is the cutoff on that? Something like that. Let's say you bought a storage unit or built one and invested heavily in that. What is the, return? What is the expectation for return on that money? Yeah.
So historically, we've returned anywhere from 12 to 16% per annum over the last 12 years.
Man, that's huge. Compared to the fact that banks want you to dump your money into them for less than 1%.
That's right. And what's interesting is until we started this business, so number one, that's for accredited investors only. So there's a couple SEC things where we can't talk about the types of returns as an advertisement. So this is not an offer to sell securities or anything like that. But what's important about that is nobody knows that they can get into these types of investments because the financial lobby has such a stronghold on Washington, D.C. Everybody complains about the gun lobby, right? Nobody talks about the financial lobby, which is by far the biggest lobby in Washington, D.C. So I have a friend who worked at Fidelity, and I said, hey, I sell, or I can have investors come in and work with me to return these types of returns secured by real estate. And I said, why don't you refer some clients that might want to diversify outside of stocks, bonds, mutual funds, and maybe I can help your clients and you can service them better. And you know what he told me? And this is just a couple of years ago. He said, that's called selling away. I will lose my licenses for that.
Wow.
And I said, well, why do you think that is? And he said, I think the financial lobby is they can't figure out a way to make money on you investing with Steven, but they can figure out a way to make money with you investing in Wall Street. And that's why they don't allow it.
Oh, wow. Yeah, well, there you go. Just like the IRC, the Internal Revenue Code is not made, the president doesn't write that code. It's the Congress people.
That's right.
It's, our politicians, that they'll write whatever they are told to write. Whatever pays the most.
And depreciation is one of the reasons that I got into multifamily real estate as well, because you can take losses against these buildings to decrease your earned income so that you can legally pay less in taxes. Sure. And I didn't know that. When I was flipping homes, I was paying 37% ordinary income tax plus a New Jersey state tax. I was paying almost 50% of my income to income taxes. And when I found out that the tax code applies to me the same way that it applies to you and the same way that it applies to billionaire real estate moguls, I was like, man, I can actually start to play the game the right way and minimize my taxable income.
Yeah, I'll tell you, you're operating within the law.
Absolutely. And the law has been the same since 1956 when it comes to depreciation.
Yeah.
Everybody points fingers as this politician, that politician, this politician. No, it's the the same tax code.
Sure. Right. Oh, being an ex-employee of the IRS in my younger days, I can tell you that, there is a bunch of nitwits working for them people. So, but other than that, well, let me ask you this then, before we get too far along. This platform is basically for people that, like myself, that don't use big words and like just the common person's look at life here.
Yeah.
What would a individual do that gathers? Let's say they have $2 or $3 grand in the bank that they need to. They're thinking about investing, and of course, all these fishing lures from all the TV guys are coming across. Is there a place in Integrity Holdings for them?
Not yet. We're working on it. It's a very long, arduous process to be able to advertise to kind of the average investor that's looking to deploy under 10 grand. So it costs about $500,000 to create a fund that's allowed to take that, and a ton of SEC scrutiny. So I expect sometime next year we will launch a fund like that. There are funds available that are already in existence for those type of investors. There's a great place called Fundrise where you can invest a couple $1,000s. I think the minimum's $500 into
Perfect.
Real estate backed type things. So, it really depends on kind of how much money you're working with, what type of people you want to work with, and what type of investments you want to make. But there are a lot of smaller type funds that can take smaller capital amounts. If you just go on Google and type in, real estate investment, $1,000, you'll see some sites that come up that are basically crowdfunding sites that are crowdfunding for types of properties. And some of them might just be single family homes that are getting flipped. They might be mortgages. They might be apartment complexes, things like that. What a lot of people don't know too is that you can also invest with your IRA or your 401k. So I think a lot of people keep a 401k, they retire, they have a bunch of money in their 401k, and they just watch it on the stock market and pray it doesn't go down too much. But you can actually self-direct that once you're not an employee anymore into a self-directed IRA and get the same tax advantages, continue to grow tax deferred while being in a real estate investment like this.
Oh, well, I was just talking to a friend of mine. We're both retired federal employees. And he was telling me that he lost like 30% of his TSP, which is his retirement nut for his life, and losing 30%. Now he's a young guy. He's he just turned 63 or something. But I mean, that would have me in the cardiac unit.
Yeah, it changes your retirement projections, right?
Oh my goodness, yeah.
Yeah. So my chief operating officer had a TSP. He was a civilian officer with the Navy. He ran cybersecurity for the naval airspaces in New Jersey. And he's now my chief operating officer. And he rolled his TSP into a self-directed IRA. And now he's invested into our deals as well.
Yeah, nice.
And he's looking at it knowing what he was in. And it's interesting because if you look at your TSP, over the years, 401ks too, I think it's really important. I think people kind of set it and forget it. I think Dave Ramsey does a little bit of a disservice to people when he says, just set it, forget it, and don't look at it, because you need to, you got to have a finger on the pulse. So I always like to ask people, what is your average rate of return? My brother-in-law was making an average over a 10-year period of time of 3.2% in his TSP. And people think that they're making more, but after fees and, after the volatility calculation, the Morningstar average of a mutual fund in the past 20 years is only 3.56%.
Wow.
So you're getting sold this 10% mutual fund, and I haven't seen it yet.
Right. So what's a safe bet? Insurance and real estate investment then, right?
I mean, historically, and the data proves this out over and over and over again, historically, real estate is much less volatile and it gains more value, appreciated value over time. It's beat the S&P 500 every single year over the last 50 years.
Now, I kind of sarcastically, when I was reading your introduction there, these storage units, man, come on. I mean, there's not enough junk in these houses. I guess they must fill them up because they're building them like crazy.
So, yeah, some quick stats for you is 11.2% of all American households have a storage facility, have a storage unit.
That's huge.
Right. So just about 11%. So that means for every 10 houses, you're seeing a storage unit go up. So, there's feasibility studies that you have to do before you build these things. So we built 3 of them in Orlando starting 5 years ago. We bought the land and we built them ground up construction. We built about 400,000 square feet, which, I mean, one of these was a 14 acre, almost 1,200 unit self-storage facility. It was a monster. Wow. And, it cost us $14 million to build it. CubeSmart came in as a third party property manager and managed it for us. And then we built 2 more of them. And it's like, where does the demand stop? And
wow.
The truth is we're a nation of hoarders. And people have, too much junk. They go throw it in a storage facility and they probably never look at it again for another year, 2, 3. Yeah. So the demand is there, right? And you can do a feasibility study and you can see, based on the population and population growth, how many more units are needed and how fast can you fill those things up. I think we're probably getting pretty saturated here in Bluffton. I saw a few that were going up since I've moved here and a few existing ones. So I think they're probably gonna get to a place of equilibrium and stop building them. They'll probably go a little bit west as gentrification takes place and populations start to move through Hardyville and things like that. Sure. But yeah, I mean, the demand is there. The country, I don't know what's in these storage units, frankly. I mean,
I think people don't want to get rid of things that are mementos of their youth, or their mementos that have meaning to them. So, like you said, absolutely.
I did a previous podcast where I said, I think these things are filled with macaroni art. I'm almost convinced.
Yeah, it's not like Storage Wars, where you get you find a box full of cash. Well, you might. I don't know.
I've never found a 57 Corvette, but we still look.
Still looking, yeah. Oh, man. So how long have you been in the area?
So we just moved down here from New Jersey 2 years ago this April. So we'll be here 2 years. And we came to the area once. We've never been here before, never been to South Carolina before. In the middle of COVID, they were still trying to strap a mask on my 2-year-old son, and I just needed to get out of New Jersey. Yeah. And we had a free week on the island for an RCI place. So we said, hey, let's go on vacation. And it was about the 4th day. Being a real estate investor by trade, you're always online looking at stuff. And I found a house and I said, hey, this looks vacant. It looks dated, which I love because that means I can build some equity into it. Let's go take a look at it. And we went there. My wife is super conservative, process oriented, wants a plan, right? I'm more like jump and grow wings on the way down.
Yeah, you're on like me. I'm the same way. My wife is the CFO of the homestead here. She continually drags the bit out of my mouth with spending. So,
we came for a week and we bought a house that week and we went home and packed everything and left.
I spent 18 months. I was doing some work for L3 as a contractor to the FAA at the Tech Center outside of Atlantic City. I lived on Brigantine Island.
Oh, sure.
I don't know. It's just, that was so fabulous until the state came after me for taxes.
They'll do
that. I said, I got to go, boys. I got to.
Like Gestapo.
Yeah. So I said, I got to go. And I had to leave the company because they didn't have anything else for me at the time.
Right.
But I'd say, just like Michigan gets a bad rap, Jersey gets a bad rap. They think everything is like Newark.
That's right.
But I'll tell you, I got a chance to travel south, and unbelievable farms, great people. I mean, it was just such a relief. I mean, getting out of Atlantic City was a big thing too.
Oh yeah, absolutely.
All the shoebies are down there on the weekends.
That's right.
The guy goes, yeah, I can't stand all these shoebies. I go, what are you talking? What's a shoebie?
What's a shoebie?
So he was telling me all about the people from Philly that come down on the bus or the train, and they used to put all their sandwich in the shoebox. So,
that's right.
That's crazy. Well, back on it. So you have your own podcast also, right?
I do. Yeah. The Investing with Purpose podcast. We do a weekly show. We've been doing, we're up to 300 and some odd episodes at this point.
Oh, that's awesome. Now, do you normally just speak to other professionals, or are you, is this?
So it's usually just me. Industry? Yeah, it's usually just me talking about kind of what we're learning in industry news, and talking about, we talk about everything from core values and how important those are to have in a business to, what is AI going to do to real estate, and, talk about some of those things. And then we do have guests from time to time, but they are typically either other entrepreneurs that are purpose driven, so that we want to know how they're making an impact in the world, and or our nonprofit partners. So, we've funded 28 nonprofits last year through the business, and we'll have them come on and kind of talk to us about what they're doing on the front lines as we're funding their ministries. What are they doing on the front lines? How are they, building the kingdom? How are they serving other people? How are they loving other people? Things like that.
Absolutely. Yeah. Serving God in all ways. That's a noble, that's our job, really.
That's it. God called me to be an entrepreneur, not so I can drive a nice car and live in a nice house,
right,
because
there you go.
The kingdom needs, I don't know if you've noticed culturally recently, but looks like we're getting pretty close to culture wars, and culture wars require a war chest.
Oh, absolutely. And I think it's time for all Christians just to make, put the stick in the sand and make it stand. And if you look just biblically, the Euphrates River is dried up. You can go historically and study the Bible and figure that out, what's happening. We're pretty damn close, as they say.
I read the book. I know we win in the end, but it doesn't mean we don't get to go to sleep right now, right? So, the why behind our business, the Investing with Purpose ethos is exactly that. It's like, what are we doing to make an impact for the kingdom? What are we doing to make an impact in people's lives? It's incredible because we get to, we own thousands of units with thousands of families. So we get to partner with, we have a nonprofit on site at all of our properties that live on site, that just love on people, that just hand out waters, and single moms come home from the hospital. We're dropping off baskets with diapers and wipes. And, we have somebody on site that we gift essentially an apartment on every complex. And then those people they're tasked with just loving on tenants, ministering to tenants, pointing people to prayer times in the conference room when we have Bible studies, and pointing people to local churches if they need help, pointing people to food pantries if they lose a job. And, so we get to minister to those folks that live on site. And then we also get to fund these nonprofits around the world. When Russia invaded Ukraine, we had a pastor that we supported that was there from the United States that pastors a church there. And he called us up and he said, hey, there's tanks rolling through here. We got to get these women and children out of here. I need vans. We were able to pay for some vans to get people run out of Ukraine back and forth. And then they called us back up and they said, we need bulletproof vests and bulletproof, armor to get these kids out of here. And I didn't know how to do that, but another nonprofit that we funded, he was a special forces operator. The guy who runs that nonprofit actually saved Captain Phillips off the Maersk. If you remember the movie Captain Phillips with Tom Hanks.
Absolutely. Yeah.
So he was the lead special forces operator that went and grabbed him. And now he runs a nonprofit. So I called him up. I said, hey, you don't have any connections with bulletproof vest suppliers, do you? I said, this guy said he needs bulletproof vests, but they're telling him it's a war zone now. It's going to take him 3 to 4 weeks, and we need them like now.
Yeah.
And three days later, he had a container of bulletproof vests and bulletproof blankets to wrap the kids in that we were able to fund to get some people out of that war zone. I mean, so God's done incredible things through this donor advised fund.
Yeah, you're doing God's work, and praise God for all those connections. He has a way of making that happen.
He makes those divine connections, you know? And,
yeah, absolutely.
I mean, so of course we fund some things around the world, but our focus is the home front, right? How are we getting our country to a place where people can recognize morals and values again, where we can change the conversation from kids changing their gender identity to what is just right and wrong for once, right? So we do a lot of battles here. We helped save over 9,800 babies with sidewalk ministries outside of abortion clinics, doing ultrasounds and things like that. So yeah, God has really stepped up. I mean, we prayed years ago, how do we give more abundantly now before we quote unquote make it, right? And he said, just give me 1% of the next deal. And we just did 1% above the tithe, right? So above the tithe, let's do 1% of the economic benefit of this one project. And it wasn't a lot of money, but we were faithful. And now we're doing 50, 60, 70, $80 million deals and giving away 10, 15% of the profits of those deals.
Oh, God bless you for that, man. That's exactly why we're going to be expanding TalkOne Radio. And I'm attending a church, New Life Church on 278. It's a small, diverse group of people, hand in pocket all the time. And, I'm going to try to get their pastor to come on for an hour a week, just to give a parable. We have the ability to take call-ins, and that's a good segue. Folks, call in 843-894-2151 if you want to ask Stephen a question about his giving or his investment group. So, but that's what I want to do. I want to place them and use this as a springboard to get the word out and continue to work with them in many ways. I developed some videos for them and such, but I think it's time for everyone that's a believer in Jesus died for us to grab the saddle and let's go. Let's start riding, man.
It's time to do some work. I think God's calling his remnant together right now. I think I see it in all groups that I'm in, all these different entrepreneurs that are like really fired up to start making an impact, giving back, funding ministries, just putting on the armor of God and going, getting after it. I mean, it's, business is marketplace is my ministry. We've had 3 salvations in the business since we started the company, and we're trying to touch as many lives as we can. And I mean, God didn't call us to sit at home, right? He called us
to be shy. No, exactly.
Go disciple.
Right. I love just, people get really afraid about, doing testimonials or witnessing. The minute they hear that, they're like, well, I got to get out of here. I'll be back in a little. Well, listen, you don't have to do anything but start a conversation with somebody. Yeah. That's it. I mean, if you're personable enough to do that, I mean, introverts aside, I mean, I'm sure they're not going to go out and grab somebody and say, hey, mister, how are you today? But, there's ways that you can just communicate with people and start a conversation. That's what this platform was always about, is that setting a dialogue to bridge the communications gap. Now, unfortunately, the people on the left side of the aisle, they're not interested in having dialogue. They're interested in calling me names and writing me nasty emails. Hey, listen, I can take it. I've been around a bit. That's not going to defer me from still being here week after week and, doing our jobs.
Yeah, I've had investors call me up and say, hey, I want to place X amount of dollars with you, right? And I just don't like the ministries that you're supporting or the missions that you're supporting. And I think it would be cool if you just took those off of your website and did that stuff privately. And then I would go ahead and invest with you guys.
Wow.
I said, well, there's a lot of other investment companies out there. I'm sure you'll find a place for your money.
I'm good for you. Good for you. That's integrity. The name fits like a glove.
Yeah. And, a lot of people, when we started, they were like, oh, you want to name your company something like that so that other people think that you're filled with integrity. And my answer was always no. It's a reminder to us who we work for and what we stand for. And one day we'll answer for all of it. So
you better believe it. Yeah, you better believe it. I didn't have a run-in. It's not really a run-in. I had an exchange with somebody about Catholicism, and they were, it's like they're so loyal to that religion that they can't see the forest or the trees. Unfortunately, sometimes I'm not one to smash people over the head with the truth, but I'm trying to slide it to them, saying, look, we don't need an intermediary. We have. I can pick up the red phone anytime I want.
That's right, the bat phone. That's good.
When I start sinking, I pick up the red phone. We get right into it.
Yeah, that's right.
So, and of course, Catholics don't think that way. They think that you have to pray to several different saints and Virgin Mary and confess your sins to a priest in a small box. I mean, I grew up Roman Catholic, so I'm not throwing stones at anybody. I'm just telling you my experience. But when I got saved in 1975, the veil was ripped from my eyes, and I could see what was going on and the freedom that I had. Go right to the source. Yeah, absolutely. Now, did I stay on the narrow path? No, I jumped down on the freeway as a young man, and ran around wilding out, and some people call it backsliding. I just was under the influence of the devil during that time. And, you come to a point in time in your life where, the crossroads, the wide road and the narrow road cross, and you have to make a decision. I've had several near-death experiences, some not so pretty. And, it woke me up. It was God like tapping me on the shoulder saying, I put the Holy Spirit inside you for a reason. Now, lad, I'm just ringing a dinner bell. Let's go. And he turned me off onto the right road and got me back on the straight and narrow there, whether it be narrow or not. It is the right road. So it's not the easy road. It's the hard one.
No, C.S. Lewis said if he wanted an easy life, he would have had, or if he wanted something that just brought him joy, he would just go to a bottle of port. So Christianity would be the last thing that he would choose if he wanted something easy.
Good point there. That's awesome. The integrity with, what is it? Investing with purpose.org. Investingwithpurpose.org. If people visit that website, what are they going to find?
Yeah, so they'll learn a little bit about the nonprofits that we support, learn a little bit about the returns and kind of the portfolio, and just learn about the team. They can access the podcast there. But the main thing you want to do there is sign up to join the Investor Club. The Investor Club, we send out weekly newsletters. We do frequently asked questions, state of the market. It's just a real educational tool to kind of understand, because we understand that real estate investing is new to a lot of people because it hasn't been brought to the masses in the way that I think it should have been. So there's a lot of videos and, just kind of podcast episodes with CPAs that we've done, and just a lot of information there. And then if you want to, once you sign up, one of our team members will reach out and see if you're just kind of looking to get educated, or if you want to jump on a call with one of our members on the team. To do a deeper dive. If you want to do, we do weekly webinars and Q&As that basically is like, hey, what is this? How's it work? How can I invest? What's the minimums? Where can when the funds come from? All those types of questions that we get answered.
Have you ever considered doing I know you're pretty new to the area, but I live in the Sun City community and I play tennis with a lot of guys, play softball, etc. And I know that this has come up several times about, the wringing of the hands about the stock market. And have you ever considered coming out and doing a stand-up brief and, welcome to Integrity Holdings?
Yeah, so we've done some investor dinners where we'll sponsor a dinner and have people come out, and we'll do kind of a 15-minute introduction, and then people can hang out, eat some dinner, or a little cocktail party, stuff like that. So yeah, I'd love to find out, how to get those things done in the area, because I think there's a lot of local people that really want to hear more about how that works. And
well, have you done it in Sun City here?
I have not. Mm-mm.
Okay, well, I officially am signing myself up as your liaison.
Awesome. I appreciate that.
So I want you to just, you tell me what you want done, and I will chase it around. As a brother Christian, I'm more than happy to break my back for you. It'd be my pleasure. That. Yeah, I don't expect anything in return, by the way. All right, let me see. I wrote some questions down. We might want to. I know there's many different types of real estate investments, such as rental properties, REITs, and syndications. And I think we both understand that compared to stocks, they're miles ahead and miles above those things, right?
Yeah, I mean, just the data, just, the volatility and kind of the overall return profile, it's night and day.
Yeah. So our people are actually buying stock in the investment vehicle that you have?
Yeah, so we have a fund that gives people a lot of diversification. So we have a $100 million fund that just launched in December. We'll buy about $300 to $400 million worth of property.
Wow. And
you are literally a K1 owner in all of those properties in the fund. So at the end of the year, you get a K1 partnership return instead of a 1099. So right now, if you're in stocks, you're getting a 1099 based on your income at the end of the year. If you have rental property, if you have a single family rental house, you're issuing a 1099 to yourself from that rental property. This is a little different because you're a business owner. So you own shares of the company that own the underlying asset. So yeah, you actually have ownership in all of these properties. And then at the end of the year, you'll get a K1.
No, the K1 is a form, correct? It's
the form K1 it's a partnership return. So you have your personal, like a W-2 job, you get a W-2 form to file with the IRS. If you have an independent contractor or a business, you're getting a 1099. So like for your mortgage interest, they'll send you a 1099, right? To see what you've paid in interest. A K1 is similar. You file it with your taxes, but like if you were to invest in a REIT on Wall Street, you wouldn't get a K1, you'd get a 1099. And why is that important? Well, a 1099 shows your income, and then that's taxed in a certain way. A K1 is taxed in a different way, but you're taking the depreciation from across all of those buildings. And you typically will see a K1, let's say you give us $100,000 to invest. Our typical investor will see a $50,000 loss on a K1. Now, why is that important? Why do you want that? That means because all of the income that you took that year, you can make $50,000 in income basically tax-free because of the depreciation against those buildings. So it becomes extremely tax advantaged.
Oh, that's awesome. That is awesome. And I was going to ask you, as a K1 holder, then you kind of answered that question. The depreciation, is that divided among all, or how is that handled?
Yeah, so it's based on the dollar amount that you have in. So if we're raising $100 million and you have $1 million in, you'll get 1% of the depreciation across the board. But yeah, that's split up simply between all of our investors, and they share it at the end of the year. We issue you a single K1, even if we have 10 properties in the fund. We aggregate all that data and we do all the hard work to make it a single form for your investment.
Wow, that's awesome. That is awesome. I wish I would have met you about 15 years ago when I retired.
I have heard that before.
Because I had I'm a civil service retiree, so I dumped everything they would take into the TSB. And
they had a good matching program, right?
Yeah, definitely. And I moved it out into another vehicle that just never really helped me out at all. So,
yeah.
I mean,
Well, and a lot of people like the real estate investment vehicle too, because it creates cash dividends, right? We pay our investors monthly, so they get ACH deposits every month without touching their principal balance, which is,
oh my goodness, that's awesome.
Which is really nice. Yeah.
That is awesome stuff. Wow. Man, I think you covered everything that,
I hope so.
I mean, you're like a deep, we're in the deep end now, which leaves me behind. I'm dog paddling to the side right now, because if I dive any deeper into this financial world, you'll never hear from me again.
Yeah. Well, the simple thing is we do the heavy lifting. You get checks in the mail. It's passive. You have to do your due diligence up front. You have to understand what it is that we're buying. We'll send you some pictures of some apartment complexes that we own already that are cash flowing. And then, you do your due diligence and then you say, okay, I'm in. And then after that, we send monthly newsletters that give you the financials of the properties with updates of what the nonprofits are doing as well. So you kind of, even though the nonprofits are funded out of our profits, not yours, you still partner with us and see, hey, this is what's happening through these investments, which is really cool. And then we show you some before and after photos. You get a monthly statement that shows this is where your capital account is. And that's it. You go lay on a beach somewhere.
Now, are these all backed by any type of insurance, or is this just...
Yeah, I mean, we have obviously insurance on every property that we have as required from banks and everybody. I mean, so the equity that we're bringing in is 20 to 30% of what the value of the property is, right? And then we get these big loans that we have to sign on. So, yeah, we're over-insured for everything. We actually did get hit. Remember that storm that blew through western Florida not too long ago?
Oh, yeah.
And it cruised all the way across the state and actually hit one of our properties in Daytona Beach on the east side. And we took down maybe, 80 trees on property. We had a 368 unit property there and took down 80 trees. And yeah, insurance, more than covered it. And what's cool about these properties is people think insurance is just cover for property damage. But if there's property damage to where you have a loss in rent, the insurance actually covers that rental loss as well. So the income is covered.
So it's a double net.
Yeah, I mean, it's really...
Yeah, you're making us like wearing two life preservers.
Exactly.
Well, hey, I got to ask you, I think you got a beautiful company there, and I'll do what I can to help you out in any way I can. People should definitely go to investingwithpurpose.org. It's free to join, right? There's no cost.
Nope, free to join. And yeah, we'll give you as much information as you want.
All right, let me ask you a question completely off the wall here. I don't know if you know this guy on YouTube. I see him occasionally, this Ben Mahal or whatever, Mahala. He has a guy, I think he goes about 5 bills, weight wise, but he's always splashing money around and, investing in real estate. And,
I have seen that guy. I've seen him on like Instagram or something. Yeah.
Yeah. I mean, he's, he sets up clients. He has people call him, for
chain smokes, right?
Yeah, like a fiend.
I've seen this guy.
He shouldn't stop that immediately, or else his heart's going to give up.
Oh my goodness! I mean, between the size and the habits.
Yeah. So he's always flipping his money. I don't know whether they call that where you sell one thing and you got to dump money into another thing before you get taxed on it. I don't know what the deal is.
1031 exchange.
Yeah, the exchange. So he's always flipping these big number. And he buys hotels like crazy and, revamps them and has this squad of minions around him all the time. And he screams at him all the time.
Yeah.
I mean, that guy he's a real pip, but I just was wondering if you had seen him.
Yeah, I've seen him. Our model is different. So I know that he goes in and he spends, obviously it's different. But so I think his business model is such where he goes in and he does a big renovation, what we call a heavy lift in the industry. So he'll go in, he'll do a heavy lift, and then he'll sell it. And basically he'll flip it. It'll take about a year or two, but it's a flip. So our our goal is threefold. One, it's preservation of capital. How do I not lose money? 2, return of capital. How do I get my money back? And then 3, return on investment. If we take care of numbers 1 and 2, number 3 will take care of itself, essentially.
Right.
So we're looking for long-term debt, right? Interest rate volatility is a thing right now. So we're looking for 10-year debt or a 10-year mortgage is what that means, to where we can predictably understand the cash flow. We're not getting into, so when you do a heavy lift, you have to get a construction loan. Construction loans are all over the place, right? What we don't want to do is get into a bridge to nowhere, or a bridge loan to what's the interest rate going to be when we're done? I have no idea. So we just lock in, it's cash flowing. There's some upside that we can do. We're going to hold these properties for 5 years or so, and it's going to cash flow. It's going to appreciate. It's right down the middle of the fairway. We're not doing I'm not doing development right now. We're not doing, major renovations, not doing flips essentially. We're looking for preservation of capital. How do we make sure that we can consistently pay double-digit returns to our investors every single year? And how do we not have a dip in the market?
Well, when you go out and consider a property, you have a team that goes out and does the soup to nuts and make sure that the bones are good. And
I mean, we actually go inside of every single unit. We bought a 984 unit in Tampa, which is a city essentially.
Yeah, right.
And we went in and inspected every single unit, every single hot water heater, every single AC condenser, every single burner on every single stove. So yeah, it's a big team that goes out. We do property condition reports, the underwriting, underwriting's everything, right? How do we predict where we're going to be in 5 years? And that is just being super conservative, knowing what the numbers are in the area, and having a real confident team behind you.
Awesome. That's awesome. Listen, our time is up.
Well, thanks so much for having me, Al.
Yeah, I wish you so much well, man. And God bless you for doing what you're doing. Please take me serious when I mention that if I can facilitate anything for you within this community, I'd be more than happy to. I mean, we have investment team or clubs here. I mean, those would be the hammers that get in front of guys who are always kind of playing with their money and looking for something solid. And
love it. Obviously, we're getting into a recession. There's market volatility, a lot of uncertainty. Having a hard asset to back your money with, I think, is the play right now.
Give me a date in a couple of weeks and give me some time to do the legwork, and I'll take care of everything for you.
Appreciate you.
Okay, man. Thanks a lot, Steve. I really enjoyed our time together, and you're welcome back anytime if you want to bring somebody out with you, or you want to talk about one of your nonprofits. I'm all ears, and so is my listeners. So
awesome. Appreciate that.
You bet. Thanks a lot, man. We'll talk to you again soon.
Thank you.
Thanks for listening to the Investing with Purpose podcast. If you're finding value, would you leave us a review and share this with your friends? And go to investingwithpurpose.org to learn more about how to partner with us and to learn more about the nonprofits that we support around the world.